Good day. Today is Thursday, June the 6th, 2024. And today I'm going to talk a little bit about the dollar index, specifically about the dollar index traded in this ICE Singapore. Now, ICE Singapore refers to Intercontinental Exchange based out in Singapore, and the product is the dollar index futures. Now, let's get into the content itself. And of course, before we go into the chart, let me give you an overview of where the market, or rather what is moving the markets of late. The dollar index was down about 0.1% in early London trading this afternoon, hovering near the 2-month low. Now, this is very much in line with the benchmark US 10-year Treasury yield, which is incidentally also trading near the 2-month low. Now, sentiment is a little bit soft right now following last night's weak ADP job reports, which suggests that the US private employers are hiring less, and this is actually 4-month low as far as May is concerned. Now, this is actually giving rise to the idea that the US job market is actually cooling. Now, analysts are also looking forward to possible rate cuts by the Federal Reserve in the second half of this year in the face of an obvious slowdown in the US economy following the downward revision of the Q1 GDP estimates last week. Now, analysts are also betting that the Federal Reserve will cut interest rates in September and perhaps one more time later in the year, according to the latest poll conducted by Reuters. Now, incidentally, last night with the Bank of Canada, the BOC cut rates by 25 basis points to 4.75%, and making it the third major central bank to actually cut rates this year, following the Swiss National Bank and the Sweden National Bank earlier on. Now, tonight, we are also expecting the European Central Bank, the ECB, to also cut rates by 25 basis points. So we can see these are the drivers that is possibly moving the currency markets, in particularly the dollar. Okay, so based on the chart here, I'm showing you here in front of you the monthly time frame for the dollar index. This is referring to the cash index. We can see that generally speaking, we can see that the dollar is actually very firm based on the dominant trend, because the bigger boxes, as you can see, are green. There are two green boxes here, showing us that the dominant trend is actually bullish. And of course, based on that, we also see that there is also a counter trend that is also developing from a high of 114.78. And we have a dominant trend that's up and a counter trend that's suggesting that near term we could be seeing some more weakness in the dollar. But by and large, the dollar is bullish. Okay, just to give you the background. And this is the weekly time frame. This is referring to the mini dollar index futures traded on ICE Singapore. And in this particular time frame, we can see that the sentiment is actually favoring the downside. The dominant trend is actually down. 114.61 is the high. We can see that from here, the market is doing a series of downward movements, suggesting that we may possibly see further losses in the dollar. Then, of course, in the particular time frame, we also say there's a counter trend in place. Once the market breaks below 99.26, then of course we have to eliminate this counter trend rally here and keeping the dominant trend intact, suggesting that prices do favor the downside more than the upside as far as the weekly time frame is concerned. Now let's take a look at the daily time frame. Now the daily time frame is obviously very bearish right now, because the bigger box is actually in pink, with 3 boxes suggesting that the counter trend has started from as low as 143. This is going back just towards the end of last year. So this year we can see that the dollar has actually struggled in a 3-wave rally, hitting the VDR in the down AB. You can see that the down AB here hit a high of 106.31, which is marginally into the VDR defined as 78% retracements of the down AB. And if you connect this recent low here, we see that last week, this week, we can see that the dollar index has actually punched through a potentially support line here. And this is again suggesting that we may be seeing lower prices ahead. And the target remains anywhere between 98.26 to 99.79. Okay, so this will be the target to aim for. And this is a 3-wave classical pullback here. So this is all I have for you for today. In the meantime, you take care and happy trading. Bye-bye.